Hey there. Ready to dive into this stack? It's a Thursday, January 16th, 2025. And we've got a lot to cover. Market swings, tech drama, robotics, and even the future of AI. You're particularly interested in where the market's heading, what's hot in tech, and maybe a bit skeptical of the hype surrounding certain sectors. We're going to break it all down for you.
Yeah, it's interesting to see how the market mood has shifted just in the last day. Yesterday was all about risk on, but today feels a bit more cautious. Maybe it's the upcoming long weekend or some lingering political uncertainty, but investors seem to be taking a breather.
Yeah, and it seems like tech, especially those high-flying AI and quantum companies, are leading the slowdown. Do you think this is just a pause? Yeah. Or the start of a larger trend?
It's hard to say for sure, but it's definitely something to watch closely. Tech has been on an incredible run, and a correction is always a possibility. What's particularly interesting is that even with the slight downturn, earnings season is giving us mixed signals, particularly in the financial sector.
You're right. Bank of America and Morgan Stanley both beat expectations, which usually points to a healthy economy with strong consumer spending. But then we have PNC Financial. They beat estimates too, but their stock is down.
That's the thing about the market. It's not always rational. In PNC's case, investors might have been expecting even better numbers, or perhaps they're concerned about some underlying metric in their report. It's a good reminder that we need to look beyond the headlines and really dig into the details.
Speaking of digging deeper, we have this debate raging in the world of quantum computing. NVIDIA's CEO came out saying practical applications are decades away, which seems strange considering they're hosting a quantum day soon. Seems a bit contradictory.
It does, doesn't it? And then we have companies like D-Wave and Microsoft pushing a much more optimistic timeline, even claiming to have working quantum applications already. This raises the question, are we seeing companies trying to manage expectations, or is there truly that much discrepancy in the technology?
It's definitely a head-scratcher. And to add another layer to this, NVIDIA is also partnering with a bunch of robotics companies to enhance their products with AI capabilities.
Yeah.
Symbotic is even buying Walmart's entire robotics division. There's clearly a lot of movement in that sector.
Absolutely. And if we connect this to the quantum debate, it makes you wonder if advancements in quantum computing could actually accelerate the development of even more advanced robotics. Imagine the possibilities if we could combine the power of quantum computing with the physical capabilities of robots.
That's pretty mind-blowing thought.
Yeah.
But it also raises some concerns, doesn't it?
Yeah.
What would this mean for jobs and automation? Are we on the cusp of a robotic revolution, or is that still the stuff of science fiction?
It's a question worth pondering for sure. On one hand, advancements in robotics could lead to increased efficiency and productivity. On the other hand, it could also displace workers and exacerbate existing inequalities. It's a complex issue with no easy answers.
Very true. And speaking of complex issues, we can't ignore the news about Hindenburg Research shutting down. They claim to have shook up some empires with their short-selling reports, but now they're calling it quits.
It is fascinating, isn't it? They've been a thorn in the side of many companies, and their reports have often sent shockwaves through the market. Several companies they targeted recently, like Carvana and Super Computer, are seeing their stock prices rise now that Hindenburg is out of the picture.
So does this suggest that short sellers has too much power? Or were they actually playing an important role in exposing fraudulent companies? It's a tough one to call.
It's a complex issue with valid arguments on both sides. Some argue that short sellers provide a valuable service by uncovering wrongdoing and keeping companies honest. Others argue that they can manipulate the market and unfairly damage companies' reputations.
Definitely a lot to unpack there, but before we get too deep into that, let's touch on a few other movers that might be of interest. Plug Power just secured a deal for hydrogen electrolyzers. Taiwan Semiconductor has strong earnings, but some are saying it's overvalued. And Uber is on a tear with news of their autonomous driving advancements.
Those are all companies worth keeping an eye on. They each represent different facets of the market and how various trends are playing out.
Agreed. Now, before we jump into part two and really get into the companies you've specifically been following, I want to touch on some broader economic data because it feels like we're getting mixed signals right now. Retail sales for the holiday season just came in lighter than expected, which hints that maybe consumer spending is cooling down a bit.
That's a data point worth noting for sure. It suggests that perhaps the economy isn't as robust as some might have believed. And to add to that, initial jobless claims were slightly higher than anticipated, which could be a sign of some weakness in the labor market.
So we've got these seemingly conflicting signals. Some companies reporting strong earnings, while broader economic indicators are hinting at a potential slowdown. What do you make of that?
It's a puzzle, isn't it? It highlights the importance of taking a holistic view of the market and considering all the factors at play. It's not always about black and white, bull or bear. Sometimes it's about recognizing the nuances and navigating the gray areas.
Well said. Now let's shift gears for a moment and talk about the cryptocurrency world because there's been some interesting activity there as well. Ripple, despite their ongoing legal battle with the SEC, has become the third most valuable crypto.
It's a testament to the resilience of cryptocurrencies and their enduring appeal, even in the face of regulatory challenges.
And there's been a lot of buzz about Solana lately, a blockchain platform that's gaining traction for its speed and scalability. It seems like every week there's a new player in the crypto space.
It's a rapidly evolving landscape, and it's exciting to see the innovation happening in this space. It'll be interesting to see how these cryptocurrencies perform in the long run.
And of course, we can't forget about the OG crypto Bitcoin. Cathie Wood, who's known for her bold predictions, is doubling down on her belief that Bitcoin could reach $1.5 million by 2030.
It's a bold prediction to say the least. But if anyone's going to make that kind of call, it's Cathie Wood. She's not afraid to go against the grain and bet on disruptive technologies.
Right. So we've covered a lot of ground here. The markets, the economy, tech, and even crypto. It's clear that we're living in a time of rapid change and innovation, and the investment landscape is reflecting that.
Absolutely. And as we move into part two, we'll delve deeper into the specific companies that you've been following, providing you with a more focused analysis of their potential and the challenges they face.
So stay tuned. We'll be right back after a quick break.
Now that we have a sense of the broader market forces at play, let's dive into some of the specific companies you've been following. You mentioned being intrigued by Wheeler Real Estate and their wild price swings.
Yeah, Wheeler always seems to be making headlines, even when there's no apparent news driving the movement. I know it's a low-float stock, which I understand makes it more susceptible to volatility, but can you explain exactly what that means?
Of course, low float simply means there's a limited number of shares available for trading. This can make the stock price jump around dramatically because even a small amount of buying or selling pressure can have a big impact. Wheeler also has a high short interest, which adds fuel to the fire.
High short interest, what does that mean?
It means a lot of investors are betting that the stock price will go down. They're borrowing shares, selling them, and hoping to buy them back later at a lower price to make a profit. But if the stock price starts going up instead, these short sellers are forced to buy back the shares they borrowed to limit their losses, which drives the price up even further. It's a bit of a self-fulfilling prophecy.
So it's like a game of chicken, between those betting on the stock going up and those betting on it going down. Fascinating. Now, Powell Max is another company that caught my eye, mainly because of their aggressive acquisition strategy. They just announced a new purchase, but their stock pulled back a bit after the initial excitement.
Acquisitions can be tricky. The market often reacts cautiously because it takes time to see if the acquired company will be successfully integrated and contribute to the bottom line. In Powell Max's case, they seem to be playing the long game, even securing a line of credit specifically for these strategic investments.
So it's more about long-term growth potential rather than immediate gains.
Got it.
Now, shifting to the world of AI and robotics, Primatech seems to be riding the wave of enthusiasm surrounding NVIDIA's technology. Their stock soared after announcing they're incorporating it into their cleaning robots.
The NVIDIA effect is real. Anything even remotely connected to AI and NVIDIA seems to be attracting investors right now. But it's a good reminder to be cautious. Just slapping a trendy technology onto a product doesn't guarantee success. Remember, sober safe. Their stock spiked on news of a large investment, but those gains evaporated quickly.
Yeah, it's easy to get caught up in the hype. Speaking of hype, Symbotic is another robotics company making big moves by buying Walmart's robotics division. That's a pretty bold statement about their ambitions.
Absolutely. It positions them as a major player in warehouse automation, a sector that's only going to grow in importance with the rise of e-commerce and the increasing demand for efficiency. But they've also had their share of challenges, haven't they?
You're right. That hiccup with their financial reporting back in November was a bit concerning.
Transparency and accuracy in financial reporting are crucial for maintaining investor confidence. Any whiff of impropriety can cause a stock to plummet, as it did with Symbotic. But they seem to be recovering. They've amended their reports, and some analysts are regaining confidence.
Now switching gears to a company that seems to be on a roll, DOYU. The Chinese live streaming platform caught my attention with their recent announcement of a hefty cash dividend.
DOYU is benefiting from the explosive growth of gaming and esports, especially in the Chinese market. But investing in Chinese companies can be tricky. The regulatory landscape can be unpredictable, and there's always the geopolitical factor to consider.
That's true. You mentioned the importance of diversification earlier. It's probably wise to be cautious with exposure to any single market. Now, I'm curious about Cleveland Biolabs. They've been working on a screening test, and it just got approved in the United Arab Emirates. This is a big deal.
It could be. But as with any biotech company, it's important to understand the market opportunity and the potential revenue stream associated with this approval. Sometimes regulatory approvals in smaller markets are just stepping stones to larger markets like the US or Europe.
So it's promising, but it's still early days. Makes sense. Now, Resolve AI is a company I'm personally excited about. They're using AI to improve customer service, and they just got a glowing buy rating from analysts.
That's always a good sign, especially when the price target is significantly higher than the current trading price. It indicates that analysts see substantial growth potential. And it sounds like you've got some firsthand experience with their product.
Yeah, I use their AI assistant at home, and I'm genuinely impressed with how effective it is. It feels like they're really onto something.
That personal experience can be invaluable when assessing a company. It's one thing to read about a product, but it's another to actually use it and see its potential firsthand.
Absolutely. Now let's talk about two companies that have been making waves in the clean energy space. Plug Power and Rivian.
Yeah.
They both had their ups and downs, but they're pushing the boundaries of innovation.
Plug Power with their hydrogen electrolyzers and Rivian with their electric vehicles are both tapping into the massive trend of sustainable energy, a sector that's going to attract a lot of investment in the coming years.
It's no longer just about doing good for the planet. It's becoming a smart business decision as well. Consumers are demanding it, and governments are incentivizing it. Now remember microcloud hologram? They made a big splash with claims of groundbreaking quantum encryption technology.
Yes, but remember what we said about hype earlier? Their stock price has been on a roller coaster ride, which isn't unusual for companies operating in such a nascent field.
It's like the Wild West of tech investing right now. So much potential, but also so much uncertainty. Now, Halozyme Therapeutics is a company you mentioned earlier that's developing enzyme-based therapies. It sounds like they're tackling some pretty serious diseases.
They're definitely one to watch in the biotech space. Not only are they developing novel therapies, but their work on drug delivery technology could revolutionize how we administer medications, potentially making them more effective and less invasive.
That's incredible. It seems like every corner of the market is being impacted by technological advancements in one way or another. Now, DatChat is a company focused on privacy and security in the messaging space, and their stock has been climbing steadily.
They're tapping into a growing concern for many people, the security of their data and online communications. As we become more reliant on digital platforms, companies like DatChat that offer enhanced privacy features are likely to see increased demand. Their recent price movement suggests investors are recognizing this trend.
They definitely want to keep an eye on. Now, Flexible Solutions is a company I haven't heard much about. They're in the food packaging industry, which doesn't sound particularly exciting, but you mentioned they're doing some innovative things.
It may not sound glamorous, but food packaging is a massive industry, and Flexible Solutions is addressing a growing demand for sustainable and environmentally friendly solutions. Consumers are becoming more aware of the environmental impact of packaging, and companies are looking for ways to reduce their footprint.
That's a great point. Sometimes the most impactful innovations are happening in industries we don't think much about. Now, Red Cat Holdings, the drone manufacturer, took a big hit recently when they were targeted by a short seller report.
This is a classic example of how short sellers can influence the market for better or worse. Their report accused Red Cat Holdings of misleading investors and exaggerating their capabilities.
It's a serious accusation, and it caused their stock to plummet. But it raises the question, are short sellers acting as a check on corporate wrongdoing, or are they just trying to manipulate the market for their own gain?
It's a complex issue with valid points on both sides. On one hand, short sellers can play an important role in uncovering fraud and holding companies accountable. On the other hand, their reports can be biased or inaccurate, causing significant damage to a company's reputation, even if the accusations are ultimately proven false.
So it's important to be aware of the potential impact of short sellers,
Hmm.
but also to take the reports with a grain of salt and do your own research. Now, before we move on to part 3, I want to circle back to the topic of quantum computing because it feels like that's the theme weaving through a lot of these conversations.
It is. Quantum computing has the potential to be a game changer across so many industries. It's fueling advancements in AI, driving innovation in robotics, and even impacting cybersecurity.
And as we discussed earlier, there's a lot of debate about the timeline for practical applications. NVIDIA's CEO seemed to contradict himself on the matter, and companies like Microcloud Hologram are generating a lot of hype, but not necessarily a lot of tangible results.
It's a reminder that we're still in the very early stages of quantum computing. There's immense potential, but also a lot of uncertainty. Investors need to be cautious and not get swept up in the hype.
Well said. Now, in part 3, we'll shift our focus to the bigger picture, taking a closer look at those broader market trends and economic indicators that you mentioned earlier. We'll also explore some strategies for navigating this complex market and making informed investment decisions.
So stay tuned for the final part of our deep dive, where we'll help you connect all the dots and gain a deeper understanding of the forces shaping the investment landscape.
Okay, so we've covered a lot of ground talking about individual companies and some of the exciting tech developments happening right now. But let's zoom out and look at the bigger picture. What's the overall market vibe? We talked earlier about a potential shift in sentiment, especially with some economic indicators hinting at a slowdown.
Right. It's like we're getting mixed signals. On one hand, you have some companies reporting strong earnings, particularly in tech. But on the other hand, you have those broader economic indicators flashing yellow. Retail sales for the holidays were a bit softer than expected, and jobless claims ticked up slightly.
It makes you wonder if this tech rally, especially with AI and quantum companies, is sustainable. Are we on the verge of a correction?
That's the million-dollar question. Valuations in certain sectors like tech are definitely stretched. Any significant negative news could trigger a pullback. And we can't forget about the upcoming presidential inauguration. The market has been rallying in anticipation, but there's always the risk of a sell-the-news event.
You mean where investors buy the rumor and then sell once the actual event happens?
Right.
That's a classic market pattern. So with all this uncertainty, what's an investor to do? It's easy to get caught up in the fear or the hype.
You're absolutely right. It's crucial to have a well-defined investment strategy and stick to it, regardless of the short-term market fluctuations. This is where the fundamentals come into play. Diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and even geographic regions.
That makes sense. If one area of your portfolio takes a hit, other areas can help cushion the blow.
Exactly. And remember, investing is a long game. Don't get caught up in the day-to-day noise. Focus on your long-term goals and ride out the waves.
It's easy to get tempted to chase returns or try to time the market perfectly, but that's rarely a winning strategy.
Absolutely. And don't be afraid to take some profits along the way. If an investment has performed well, it's okay to lock in some gains and rebalance your portfolio. Remember, there's no shame in seeking professional advice if you need help developing or refining your investment strategy.
That's great advice. We've covered so much in this deep dive. Market trends, emerging technologies, economic indicators, and even the impact of politics and short sellers. It's a lot to take in.
It is. But the key takeaway is that knowledge is power. The more you understand about the forces shaping the investment landscape, the better equipped you'll be to make informed decisions and achieve your financial goals.
Well said. It's been a fascinating journey through the market today, exploring everything from the hype surrounding AI and quantum computing to the realities of economic data and the power dynamics of short selling. Hopefully you're feeling more informed and ready to navigate the investment world with confidence.
And remember, the journey of investing is a marathon, not a sprint. Stay curious, stay informed, and never stop learning.
Until next time, happy diving.